All right. Again, good evening, everyone. Whether you're joining us from the GFI India network or the BioAngels network, we appreciate you taking out the time today to join us. I want to first just thank all of our partners, Startup India, the Federation of Asian Biotech Association, Indian Angel Network, AIC Nalanda, Association of Biotechnology-led Enterprises, everyone who collaborated with us to make this webinar possible today. And obviously all of our panelists who agreed to come on board and share their experiences and insights with us. To start off, for those who are not yet familiar with our organization, the Good Food Institute India is a part of a network of global non-profit agencies working across the business, scientific, and policy landscape to diversify protein sources for a more healthy, sustainable, and just food system. We work on smart protein, which is globally known as the alternative protein sector. And it is a rapidly growing sector which is focused on developing viable alternatives to animal-derived meat, eggs, dairy, and all of these have vastly better implications for food security, public health, planetary health. Now, when we say smart protein, we are referring to three main categories of food here: plant-based, cultivated, fermentation-derived meat, eggs, dairy, and seafood. Now, just to quickly jump in and introduce our partner for today, Divya, could you quickly introduce BioAngels, and then we can just get started with today's session.
Thank you so much, Poorvashak, for hosting this entire session. And I'll just quickly give a brief on BioAngels. BioAngels is India's first sector-focused, one-of-a-kind angel investor group. We are primarily focusing on 6 sectors, which are biotech, medtech, health tech, pharma, agri-tech, clean tech, and also smart proteins. It is a unique partnership between BIRAC, which is an enterprise of Department of Biotechnology, and Indian Angel Network. This is the first time, I would say, when a government and private entity in this space have come together to support the biotech, health tech ecosystem and facilitate the entire biotech and healthcare ecosystem. BioAngels, I would say, is an exciting opportunity for the investors to take an early bet on the fast growth companies in the sectors we are focusing on, and actually help build globally competitive companies. As BioAngels, we are trying to build BioAngels as an inclusive platform, which would bring private investors, HNIs, angels, early stage VCs, incubator, accelerator, the entire ecosystem together, so that we can help in the growth of the entire biotech healthcare ecosystem. We typically invest in early stage and seed stage companies. Our ticket size ranges from 25 lakhs to 10 crores, and our sweet spot lies between 3 to 5 crores. This is about BioAngels. If you have any further queries, you can write to me at divya@bioangels.vc. I'll also drop my email ID in the chat box. Thank you so much.
Thank you so much for that, Divya. So in partnership with BioAngels, we have launched this 3-part knowledge series called Financing the Future, through which we are looking to increase investor interest and engagement in the smart protein sector and support founders working in this space get access to the right kind of capital. By bringing in investors and other experts like our panelists today, who can share their experience and stories, we hope that this series can serve as a helpful guide for anyone looking to invest or just understand the investment landscape of such nascent yet promising sectors. In the last session that we hosted last month, where Nicole, my colleague from GFI India, discussed the state of the smart protein sector from an investment and market perspective, Divya from BioAngels provided an overview of the investment ecosystem for angel investors. Anyone who's looking to maybe revisit that or maybe look at it for the first time, we will be dropping the link for that in the chat box. So feel free to go ahead and look at the recording, which is now online on GFI India's YouTube channel. So this brings us to today's session, diving into deep tech. So I just want to start with the fact by first addressing the fact that there's no such thing as deep technology. The term deep tech itself refers to an innovative approach that relies on problem solving and a combination of different technologies powered by the design, build, test, and learn cycle. Deep tech startups question basic barriers, obstacles, and blind spots in the current approach to problem solving and rely on emerging technologies rooted in science and advanced engineering that offer significant advances over established technologies. Now, this approach has been key in scaling and developing the global smart protein sector. To meet the increasing demand for protein without opting for unsustainable pathways, a wide variety of food, biotech, agri-tech innovation is required, with the majority of society called upon to play their part. While academia will pursue discovery research that creates the foundation of breakthrough technologies, legislators will supply laws and treaties to create pathways between labs and market. Entrepreneurs and investors will commercialize and scale these solutions to build sustainable systems of tomorrow. Now, whether it's smart protein or other deep tech solutions, investors need a guiding hand, especially when it comes to navigating the technical aspects of these constantly evolving technologies. This is where our panelists come in. Our first panelist, Jinesh, currently serves as the Chief Investment Officer at Ahimsa VC, India's first and only impact venture capital fund focused on disrupting animal agriculture by investing in the future of food, materials, and beyond. Jinesh has founded all protein startups backed by the likes of Khosla Ventures and NBA athletes, and independently advised and consulted dozens of all protein and material startups globally, including Eat Just and Good Talk. Our second panelist, Dr. Tulla, is the director of Aditya Hospitals and has over a decade of experience in leadership roles in both corporate and public sector healthcare units. He's an active angel investor and has invested in multiple startups, with his main focus being in healthcare, education, and sustainable living space. He's a board member in multiple biotech companies, including Transcell Biologics, which is an innovative biotech company working on disruptive stem cell solutions, and Gene PowerX, a startup that is personalizing healthcare delivery with its proprietary AI-enabled genomic database. Our third panelist, Shreya, has over 6 years of cross-sector experience. She started her career at UBS Investment Bank, where she led several capital raising and M&A transactions of more than 1 billion across India and the US. In her current role at Aureolis Ventures, an early-stage investment firm in India, she invests in early-stage companies like Terrado, Ground Up, Drink Prime, and Impossible Metals. And last but not least, Mirik is the head of corporate strategy and business development at Aarti's Industry and managing partner of Spectrum Impact, the family office of Aarti Industries. Under his guidance, the family office has supported companies and causes with equity capital, debt support, and also grants and donations. His sustainability and collaboration includes companies working in accelerating the ecosystem of cellular agriculture, energy-efficient appliances, enhanced weathering for carbon capture, amongst others. Again, to all of our panelists, thank you for joining us today. I'm sure the audience can't wait to hear from you. For our audience, just want to remind everyone that we will be hosting an online speed networking session right after the panel. So please stick around till the end to get the networking session link and connect with your fellow attendees. We can now just get started. So I'll just stop sharing my screen. All right, we can start with you, Jinesh. So Ahimsa, like I mentioned, was the first investment fund that focused on alternative protein sector in India. Can you speak a little bit about what was the potential that you saw that made you come in right at the early stages of the sector?
Thanks, poorvashak, and thanks to the GFI India team. Hello to all the attendees and my fellow panelists today. Ahimsa VC came into existence roughly about a year or so ago. And I think the key motivation for some of our founding GPs at the time was just the fact that their mission aligned in terms of wanting to see alternative protein or the smart protein industry accelerate towards a more sustainable future of food. And they realized that funding was short in this space in India for good founders as well at an early stage. Of course, the demand domestically in India itself for these products is still not gigantic. But our partners and we all collectively saw that India really has the potential of being a powerhouse, one of the meccas of the smart protein industry globally, given its agricultural background, given its large scale on the supply chain end of things, the variety of crops we have, the large dairy industry, many other aspects, including, of course, one of the highest consumers of chicken in the world. I mean, the reasons kind of go on and at scale, of course. And we realize that there is, the possibility that we can come in and be one of the early investors, take on risks, but also support these entrepreneurs beyond just that first check. We typically have done 3 out of the 4 companies we've invested in. We've been they've been pre-revenue R&D driven, so we were not afraid to take on that risk. Where a lot of them, back then, most of them, I should say, not all of them, definitely had concerns taking on these risks. I mean, of course, we have fellow panelists here who are also focused on biotech and understand what that kind of risk is, and that kind of sort of patient capital, a very controversial term in the VC world and in the startup world, behaves in India. So we decided to come in with some patient capital in this space, basically, and we've been companies in India so far, 3 of them on protein focus, and yeah, we jumped in thinking that a lot of the pieces of the ecosystem that all of us in some form or shape here on the panel, including of course GFI India, we're all working on creating that holistic ecosystem, right? Getting academia involved, got the government involved, startups, the large conglomerates, for-profit, non-profit organizations all working together. That's really the aim that we came in with, and post these investments that we've done in the companies that range from a consumer-facing, millet-based CPG milk to precision fermentation-based dairy that we've co-invested with Mirik in, or other companies in the oil materials space. In all of those cases, we work very closely with the founders beyond that 150K sort of check that we typically come in with, 150, 200K at a pre-seed or a seed stage. So yeah, tons of potential ahead. I think we're just kind of getting started, and it's always exciting to see that ecosystem coming together even more so, and discovering and exploring more and more of the biotech intersections that we have with it.
Thank you so much for that. That's definitely the line of thought, even in terms of just hosting this session today, to bring in investors who, have come in from different paths, and a lot of our attendees have different interests, not just in this sector, but in the larger biotech sector. So the goal is to get this ball, the conversation moving, the ball moving, and hopefully we get like a more sustainable system, not just in food, but in everything through such events. Moving to you, Mirik, to bring disruptive technologies to life, traditional industries need to get involved and invested in the future of such solutions. With Aarti Industries being a legacy specialty chemicals company, what was it that directed your family office Spectrum Impact to the alternative protein sector?
Yeah, so thanks, Poorvashak, for the opportunity, as well as GFI India, and I think it's an honor to be a part of this panel. So again, to answer your question, I think, as you rightly mentioned, Aarti is sort of a legacy chemical player at the end of the day. We are not into biomanufacturing as such. However, I think when we were evaluating what do we want to do with the family office in a very conscious way, we figured out that climate change is going to be the big thing that we really need to focus on, both from an impact perspective as well as an opportunity perspective. Now, within climate change, when we look at the big sectors, what we realized is in the end, manufacturing process is what our strength is, like what our family has been doing. So I also lead our growth at Aarti. So there's a large research and development team that works with me, around 250 scientists and engineers. So, and you have a very good network of vendors, and a lot of the challenges with some of the startups right now actually don't even envisage that they will face. So when we realize that, unlike say a VC who is just looking from a financial angle, we come from a manufacturing angle as well. And even although we are focused cumulatively in climate change, I think alternative protein sector is a sector where we can add a real value, and that's where we wanted to double down on. In that, because we also have fungible capital, I would say that we are not only equity, we are also grant and debt. I think right now our focus in alternative protein space is also on the grant side quite a lot, I think with GFI itself, as well as New Harvest, the other big organization in the space. So both funding and then taking that to equity. So our approach has been on looking at what financial tool can be more relevant. And I would just highlight that I think will become more and more relevant at scale. So right now the startup, whatever we are talking is, will be at lab or the first commercial plant scale. But the early debt providing, or who provides the funding for the first of a kind plant. And I believe that through our experience of legacy industry of how do you get the project financing, how do you get project control and things like that, we are able to add more value. And that's why alternative protein space overall is interesting in the global climate space, even specifically for us. So I think that's what we figured out. But again, we are not restricted to just alternative protein. I think we believe climate change is the bigger focus area for us.
Thank you so much for that. Yeah, I've definitely agreed on how there's so much of an intersection between all of these things, because at the end of the day, like I mentioned earlier, deep tech solutions are all about getting the different technologies, whether they are based in science or in advanced engineering, together to form these bigger global, address these bigger global challenges. So moving to, like you mentioned, it's not just alternative protein, you're looking at a much bigger landscape. Moving to our other two panelists who have experience in the wider biotech, climate deep tech ecosystem. We come to you, Shreya, first. So with Aureolis VC backing early stage companies across climate and deep tech in India, could you speak a little bit more about your investment thesis and what's the driving force behind this?
Yeah. So first of all, thank you so much, Poorvashak and GFI for organizing this, and all the other partners, as well as to the panelists. It's a real delight to be here. And at Aureolis, Poorvashak, you're right, climate change is, or rather climate tech is one of our core focus areas. And as you also mentioned earlier, deep tech, we look at deep tech as a way to solve some of the largest problems that the world is facing, and one of them being climate change. And within, climate change in specific, we of course looked at a bunch of problems and solutions, and all proteins was definitely one of them. But beyond that, we actually started off with focusing on the building blocks of climate change, which essentially means that we were looking at education, we were looking at data, and then we were looking at supply chain of, battery metals and stuff like that. So say, for example, if you look at education, 2 or 3 years ago, everyone actually started talking about climate change. In 2021, for example, Bill Gates came up with his book called How to Avoid a Climate Disaster. John Doerr came up with his book, Speed and Scale. So people were really starting to understand the magnitude or the scale of the problem. And just like the pandemic, I think climate change was something that was not very widely talked about before. I think in 2010, Silicon Valley definitely saw the first wave of clean tech, as Jinesh, you would probably relate to. And so all of a sudden, people wanted to work in climate. But as you would also imagine, that climate is a very horizontal topic. It impacts financial services to even manufacturing, right? So, for people to really help put their skills to use when it came to climate change in specific, we wanted them to learn first, which essentially meant that we invested in Terra.do, which is one of the portfolio companies that you mentioned. And Terra.do, what it does is that it educates you based on the profession that you have. So say, for example, if you're an investor, if you're a program manager, engineer, etc., it will skill you and then it will employ you. So that was one of the help you get employed. So that was one of the building blocks. The second was supply chain. So transport, as you may know, is one of the highest emitters of, in fact, in 2021, it contributed to 37% of the total emissions. And so clearly there is a use case there. Moreover, the TAM overall is somewhere around 300 billion. Which not only includes the battery metals, but it also includes chips, etc., that are usually used in consumer electronics. So from that perspective, we clearly saw that there was a huge need. And even if you look at a very, or rather, if you take a very macro or geopolitical lens, we were clearly seeing that people, or rather countries, while they were totally dependent on China, they still are. With the pandemic, there was a sudden need to sort of nearshore all of these things. So we actually invested in a company called Impossible Metals, which is again into deep seabed mining and doing it very differently. While historically deep seabed mining has I would say negative connotation to it, but here the company is being very, I would say, responsible in terms of how it extracts nodules out of the seabed to help with battery manufacturing. So that's one. The third building block that we looked at was data. So here the thesis essentially was that if you look at financial services companies, now financial services companies are essentially the ones that are, that would require to adopt first, and just due to the nature of the company and just due to the scrutiny that is involved. And for anyone to actually take any decision when it comes to climate change, and specifically so when it's such a new sector, you would need data. So we looked at data plus financial services and what is the combination that we get. So we looked at this company called Blue Sky Analytics, where the idea was that you extract data such as forest fire data and stuff like that. And then you use that data from satellite, and then you'd use that data for useful purposes. So say, for example, insurance companies or financial services companies could really look at modeling or pricing their products accordingly. So that was the gist. We also, as I mentioned earlier, looked at all protein, and we can talk about that thesis as well. But yeah, that's pretty much it.
Thank you so much for that. That's actually so interesting to look at how these different aspects, which people might not just connect together, like in the snap of a mind. When we say supply chain, when we talk about logistics, when we talk about mining, there are certain things that come to mind, and it's definitely not what you mentioned. So it's amazing to see how these startups are breaking those initial barriers of stereotypes, especially around what technology can be and what it should be. And that's what we do, particularly even at GFI India. That's what we try to keep doing: reimagine what we have, reimagine solutions. And it's not about just reinventing the wheel. It's just like looking at the wheel first and just asking ourselves, what do we want it to be at the end of the day? All right, so moving to our fourth panelist. Thank you, Dr. Tulla, for being here today. You've mentored multiple startups in biotech, healthcare, another completely different aspect of deep tech startups. Could you tell us and our attendees a bit about how you built a thesis for the biotech industry as an angel investor?
Yeah. Firstly, thank you, Poorvashak and GFI for having me as a panelist today. So, like any other sector, I mean, every sector is unique, and every sector has its own opportunities and challenges as well. So, within biotech sector, it has its own opportunities as well as its own challenges. And again, in biotech sector, there are different verticals that we look into. Like some are very deep tech, and some are more services driven, like in health deliveries, startups, all those things. So there is no one method of approach of how we evaluate startups, and we can put one thesis to all the startups together. So we have to have, when we go for a deep tech, an IP based, or something which is a patented technology that they're working on, we need to evaluate differently. Whereas something which is more of a delivery and something which is more revenue based, consumer based application, then we have to evaluate some differently. So there is different ways of how we have to evaluate biotech startups. So, but in generally, what are the things that when we look at biotech startups is that usually the gestational period is slightly higher than, larger than regular startups. And this is usually because of, there are a few regulatory challenges that usually the healthcare we face in healthcare. And also there are multiple stakeholders, for example, in platforms which are into AI into diagnosis, like we have to buy in of the clinicians, the regulatory bodies, and also the patients and everyone. So there are a lot of stakeholders who we have to see, and also it has to be accepted. So there are challenges due to which usually the time period for a startup working in this space takes time for validation, and finally comes into commercialization of its product. So when I look into startups, usually I look into some spaces where I have some kind of an understanding of the technology, or something which have a keen interest on. For example, AI in the diagnosis, or stem cells, or precision medicine, or including robotics and health wearables. So these are the sectors which are keenly into, and also when we look into startups, also in biotech and healthcare especially, we have a tendency to overestimate its use in the short term, whereas underestimate over a period of time. So whereas it creates a hype initially, whereas in a long term, it may actually have its utility value. So that cycle has to be understood, where the initial stage, whenever we invest, there is an innovation trigger happens, and there is a peak of expectation, and then where the investments pour in, and there is of course a trough of disappointment, where maybe there is the technology or the IP that they have been working on doesn't work, and there is a slope of disappointment, but this may come back again. So, for example, if you take precision medicine and healthcare, where genomics plays a critical part. So where we had this genomic project where there was wanted to do population genomics where in early 2000, and they started gathering data. There was a general tendency to believe that in the next couple of years, genomics will be mainstream in clinical practice. But that didn't happen, and there was a lot of investments that came in early 2010 and around that stage. But now, because of after a decade, because of cloud computing and the AI tools that we have, the data that has been gathered from all the population that can be used in real clinical implications. So there is a pipeline where we actually target those startups is the real critical part, and where we actually look in for investment. So these are the other things, and of course, it also revolves around any startup, the founding team, the revenue, the IP, and also the even in usually in biotech or in healthcare startups. When we talk about other verticals, we talk of disruption, something changes overnight, and we talk this will replace the existing method. But whereas in healthcare, we usually look at something which can fit in to the existing system first, and then slowly disrupt the market. So how it is actually working also. These are all the ways we usually look into it. And of course, when it comes, we have to have a long approach whenever we're investing in biotech startups.
Yeah, completely. I think it's very interesting to see how that differs, especially in all of these sectors, which is something that one might expect. But it's also interesting to see how there are so many similar challenges which startup face, whether it's healthcare or especially when it comes to regulation and disruptive technology. There are barriers which most startups are going to face. But it's great to have all of you on board today, because all of you are supporting these startups in your own ways, and that's what we're all here for. So this is a panel again, just to reiterate. So please feel free to jump in at any point if you have questions for each other as well. I would be happy to kind of let you take the floor as well. Just to move to Shreya again, in terms of, Dr. Tulla was just talking about some of the challenges that he has seen in the healthcare sector. And you spoke about how, you have previously evaluated the alternative protein sector. So just to go back to that conversation, what gaps or challenges did you identify when you were evaluating, and how do you think all proteins can fit in your investment thesis in the future?
Yeah, you're right, Poorvashak. We evaluated all proteins. In fact, GFI and Nicole, in specific, they were really helpful in providing their support and helping us think through what could really be the thesis. Honestly, we were trying to build it together. In terms of the kind of companies that we looked at, they were essentially consumer brands that were getting built out of India. And then they were ingredient brands that were also getting built. And I say that just to, sort of give you some context around what are the factors that we saw, right? So while evaluating these startups. So say, for example, if you look at consumer brands, we realized that they had to be priced at par with what the consumers were already consuming, right? The second, which is actually probably the most important to most Indians, is that they had to taste well. They had to taste good, right? And then the third was, as Tulla sir also mentioned, that it essentially had to fit really well into the food palette of an Indian consumer or any consumer, right? And so these are the three things that we noticed. And in fact, I've been speaking with an investor who invested in Beyond Burger in the US. And she mentioned that while there was a lot of traction and of course, people consumed, and I would also say that for non-vegetarians in specific, it was more so to do with health rather than anything else, right? And people were really excited. But I think if these three conditions are not met, then actually it just dies down. People just switch to the usuals. So I think this is something that we noticed, but which actually brings me to the opportunity, which is just finding cheaper and rather better ingredients in countries like India. And, I think it could really be a global opportunity for companies that are getting started from India, and it could supply to restaurants and brands across the world. So that is something that we were really excited about. But overall, in terms of gaps in evaluation, we were seeing a bunch of consumer brands, but I think we are currently not sure as to how or what could really the moat be. And I would love to sort of hear from other panelists as to what they have seen in terms of the moat, and what are they excited about?
Yeah, Thank you so much for that, Shreya. I completely agree with the fact about, how India is, especially with the indigenous crops that are present in India, we have a great massive opportunity in terms of, diving deep into what ingredients can be sourced within the country itself. And when you talk about price, that is what is really going to bring down the cost. When you don't need to import things anymore, it really brings down the cost of the end product as well. And we already have these supply chains existing in our agricultural system. We have these indigenous crops which can be functionalized. So we are definitely moving towards a direction where those products which will taste the same, which will be healthy, which will meet the price parity, all of that is definitely within our ambit, and we're moving towards it, I guess. Jinesh, I would actually ask you to step in here, and you've come in at a very early point in the sector, and you've invested in consumer brand, you've invested in deep tech players. How do you think technology in the smart protein sector has evolved over time, and do you think there has been a substantial shift in investor interest along with that change?
Thanks, Purvasha. Definitely resonate with several of the thoughts Shreya shared here. And I'll just add a tiny bit of context. Ahimsa VC has been one, of course, critical part of my work in the domain before all of this. I also have my company since about 5-6 years called Aureolis Ventures, through which I work with alternative companies of all sorts, alternative energy, alternative protein, alternative materials, independently, sitting on the board of certain startups, consulting with them. Often I'm working on some very time-constrained sort of aspects with them, startups, conglomerates, academia, a variety of them, some of the largest names in India as well and globally. And the perspective lens for me is slightly different as an investor here also, because I've been a founder in the all protein space in the past. That's really how I started in the all protein domain in about 2013, 14 is when I started scratching the surface of alternative protein, which is when Impossible, Beyond Meat, just all of the larger marquee names in our industry. Of course, some of them were born around that time. They were not even out in the market around that time. And my previous startup, Milk Guys, we were lucky to, sort of be backed by, Costa Ventures, Y Combinator, a few NBA folks, just a bunch of good folks, and the earliest investors of DoorDash and Dropbox and Google, right? So it was a very interesting mix, and all of those perspectives. Now, having been a founder in the space, I also founded a cultivated meat company for a bit, and now I'm sitting on the other side of the table, so to say, or I'm now sat on the multiple sides of the table, both in the US and then in India, starting in 2018-19 again, when the ecosystem was just starting to sort of take birth in India as well. It's been quite an exciting ride. I always look at this at a high level at 1.0, all protein 1.0, or smart protein 1.0, when it did not even exist in this world as a term. Started with way back, the Buddhist monks creating, in East Asia, the mock meats from soy and wheat, to bring in the concept of ahimsa that Buddhism also shares with several other religions, right? And that then transitioned towards eventually, fast forward to like just a few decades ago, China and Taiwan started actually industrially exporting these plant-based meats around the world, essentially, like those canned ones, or I'm sure all of us at some point or shape have come across these sort of plant-based mock duck and mock chicken and, but they clearly obviously weren't really there in terms of texture, in terms of taste, and required a lot of added flavorants, etc. But that was really all protein 2.0 for me, the way I look at it. And then I think Impossible Foods, Beyond Meats, they sort of came in and created all protein 3.0. That was really, where we started seeing a deeper focus on this becoming a larger industry, a larger solution to the whole, food industry is concerned around sustainability and climate impact and feeding 10 billion people by 2050. And of course, so many other related questions around biodiversity loss and land and water uses and so on, right? So started taking prominence around there, and the mainstream started taking note of all of this, right? And I think we're now at a point where we've evolved from all of that to 2 or 3 additional verticals in the industry now, with cultivated, precision fermentation, and of course even fungi and algae almost as a separate sort of bucket, almost now I would say. So when you look at that just as a timeline, I think we've come a long way in terms of the evolution of the industry, and even just within futuristic technologies such as cultivated meat. I say futuristic with a pinch of salt because it seemed futuristic, And of course, it's yet to scale and get to a commercial, sort of success. Obviously, we're all awaiting that, and there are challenges on the way. But at the same time, the fact that we have several thousand X, 1000X lowered the cost of a cultivated, beef patty, or we have a cultivated mammoth meatball, or a cultivated kangaroo dumpling from the marsupial world, or cultivated seafood, shrimp soups being tasted around the world for human taste tests and even being sold in Singapore. I think we've come a really, really long way. And I think being a little more specific now, I think the concerns have already been shared, I guess, by both Dr. Tulla, Mirik, and by Shreya around technical challenges in the space that, and you as well, Poorvashak, about what needs to be conquered. At the same time, I think there is a good recognition needed of the fact that this industry was nowhere at this point. Plant-based, about 15, 20 years ago, really did not exist at all. And only in the last decade or so has been in prominence. Plant-based milks or alternative milks capture about 20% of the US dairy market already at this point. And alternative meats capture a very small percentage. It's probably inching up towards 1% or something at best, in the best estimates. But that in itself, for a large pie of the meat and dairy industry globally, for such a young industry, right? We're probably still just on the ground floor at this point, I would like to say. If anything, we've moved from the basement to the ground floor at this point, both in India and I would say just probably somewhere in between ground and first for the rest of the world. So there's a lot more to go, a lot more patient capital, a lot more amazing entrepreneurs, a lot more technical innovations, a lot more intersectional work done between the larger biotech domain and food tech and biochem that needs to sort of happen. And it's already happening. The largest names in the world, the conglomerates, are getting involved. The foremost federal funds in the world are getting involved in this space. The largest and best academic institutions in the world are getting involved. And all of us here on the panel here are working in different ways to accelerate this for a better sort of climate future. So I think we've come a long way, tons of challenges on the table. But I think if the innovation so far has told me anything, while I don't want to be blindly optimistic about this space, there is tons of export opportunities from India, tons of opportunity for Indian startups in the Indian ecosystem overall to be able to leverage this, global growth in this space. It's not going to be like your e-commerce or fintech kind of return cycles from an investment perspective, right? It's not a 3 to 5 year return, but increasingly so. There are more and more, even in our conversations when it comes to Ahimsa VC and Aureolis Ventures globally. I was recently in Japan talking to investors and startups there in the all-protein domain and outside as well in the food tech domain overall. There is tons of interest. Lots of them are looking for alternative investments in general, and alt-protein and alt materials seem to be one of the topics that's of a lot of interest for people who want to diversify their portfolios. And at the same time, of course, be able to say, hey, we're doing climate tech investments from GP's LP's perspective. And of course, it's great that we have on the panel here several avenues and funds that are focused on being able to create this impact.
Yeah, and thank you so much for that, Jinesh. I think completely agreed with your point about how things are moving along, and just to add to all the examples that you gave in terms of how we're seeing the traction. In terms of cultivated meat, one of the biggest things that I would say personally, I feel was like a win is the fact that we have COP27. We've had a couple of COP27. Every time there is, momentum right after the conference, people talk about climate change, people talk about all the solutions that can work in, but it dies down. But this was the first time, and there have been so many times when people have talked about, we're going to COP27, all these leaders are flying in there. What about the climate impact of the conference itself? And COP27 was the first time where, Singapore government had a pavilion where there was cultivated meat, which was served to officials from different governments. So, that's where you see, okay, things are moving along. We are actually thinking not just in terms of an industry, but how can it actually come down to personal choices? It comes down to every part of it. We all have a bit to play. And I feel like that's one of the biggest examples personally for me to take away that, yeah, things are moving around. And like you mentioned, I've come in the sector at a much later point, and it's incredible to see the amount of work that's already going in. So just to move from that to you, Mirik, you and Jinesh both have invested in Fix44, a startup that creates non-animal derived whey and casein proteins, as well as fatty acids found in dairy using fermentation technology. Now, what was it that the Fix44 team was doing right? And how do you see the growth potential of such technologies, especially in the Indian market, where a lot of us have mentioned already, there are so many challenges to overcome.
So I think I will also maybe just mention my introduction with Bharat of Fix44 was at the GFI conference. So again, thanks for facilitating such a good conference, because that helps to do all these things and get tangible action on the ground as well. I think for us, and maybe I'll refer to it later on also, research and development is going to be the most fundamental thing at the end of the day. Because if you want to get cost parity, there are only two important things. One is do the R&D so good that your OPEX is good, and also then do something at scale so that your CAPEX is the denominator is lesser, or you are getting per unit of investment spent the best return. So R&D and scale, I think those are the two important things. I think one thing that we really liked about Fix44 is on the research and development mindset. I think that is very, very clear. I think their mindset on concentrating on both fats and proteins, and that's a very important, because if you're looking at a holistic solution to a problem rather than just looking at a piecemeal way. And I think their frugal approach, I think sometimes what happens is people get let's build a very big thing. I think the right amount of capital efficiency becomes very important at an early stage of a company. And I think that mindset is something that we really appreciated. Maybe I think I'll just ask Jinesh if he wants to add a couple of things before I continue on some of the other aspects on Fix44, because we are co-investors. So Jinesh, if you want to.
Yeah, we're lucky to have Mirik and Rohan and Spectrum Impact as co-investors. We're happy to bring them on board as well with Fix44. And just to add, I mean, echo with what Mirik mentioned here. I think just to add, they have basically been able to achieve and hit certain milestones in terms of their development, which are extremely big outliers compared to the rest of the PF world. At the moment, essentially, in terms of the amount of capital that they've raised and what they've been able to achieve so far, and the type of talent they've been able to attract at such an early stage as well in the industry, I think have been quite fascinating. And I say that with a little bit of context, two of the largest companies in the PF space that some of you might know of here for sure, like Perfect Day, that's based out of the US, and the Every company that used to be called Clara Foods in the past. And I've seen these companies come to life from scratch. Like I've known some of these founders since the very, very, very early days of when they were starting off. And so PF just in general, their realization of their journey, how they're leading the space now, is quite exciting to see how they've now partnered up with the likes of the Danons and the Nestle's and beyond. We see the same thing that in India, the largest dairy consumer, we see that being a captive base already in many, many ways. Bharat comes also additionally from I think a Google and Amazon type of background in the product world. So in addition to his technical know-how, he came in with a nice sort of mindset of being able to build product, have milestones, deliver, push products out in the market, even with the R&D sort of timelines at play. So we see great synergies in the future with several of our other companies in the domain that with Fix44. And of course, Mirik will know even more about the fact that there is tons of fermentation capacity inherently in India because of insulin production and vaccination production. So again, tons of strategic tie-ups potentially at play. An interesting landscape developing. I'll be amiss if I don't mention that aspect, right? We're absolutely proud to see another company in the space, Zero Cow Factory, who closed around in March as well recently, and with some great investors, including Brink and GFI Ventures as well. And the fact that Perfect Day has acquired a company in Gujarat, set up an office in Bangalore on the R&D front, all of it kind of really reflects well on the precision fermentation sector in India overall. Right now, we're such a small sector overall, the PF space, that looking at competitors and others getting funded in the space or having more action is all just great for the industry overall right now. So we welcome more and more involvement from investors and other strategic partners with both Fix44 and the larger PF ecosystem overall.
And I'll just add there one important point, because I come from a climate tech landscape, why we feel alternative protein and food is actually more challenging, because in any other aspect of climate change, suppose you are solving electricity, the end consumer doesn't care, right, at the end of the day. Or if you're solving steel, they're riding a green steel bike or green steel car, they don't really care. Food is the sector where they really care. And that's why I think the onus is on us to get some of the softer things also right. And that's why it's a lot of the discussion, because it's quite unique in the whole climate tech space, what food plays a role. And that's an added challenge that I would just want to put out there as compared to everything else. Because even if you get the cost right, even if you what you call do things at scale and things like that, but if the end consumer doesn't like the taste, for example, which is a cultural thing as well, right? It's a cultural thing. It's something which is heritage or things like that. So I think that just needs to be respected and as an added challenge as compared to all other climate tech things that people are thinking. So I would just maybe want to highlight that. So yeah, that's.
Thank you so much for that. Yeah, I think definitely agreed that these challenges, there's already the technical aspect of the industry. Like Jinesh, you mentioned, precision fermentation is not something that, come to mind like at the snap of a finger. You need to actually go deep into the science to understand what's even happening. Like, I think whenever we speak of fermentation to a basic consumer, it just reminds them of like yogurt, bread. It doesn't talk about what these kind of, the multiple biomass fermentation, precision fermentation, all these words are just going to sound like too technical, too scientific. And I think I would like to bring in Dr. Tulla here because you come from a scientific background, you have a background in healthcare, you've spent so many years working in it. So as an angel investor, what kind of an advice do you think you would give to other investors who don't have a technical background, but do want to invest in such deep tech startups? How do they go about this?
Yeah, so I mean, of course, as an angel investor, we are investing in a very early stage, right? I mean, it's a very high risk kind of an investment. Usually we do so that and investing in this sector can be intimidating sometimes. So I think the best way I think investors can look at is look at already existing platforms which have a good understanding of the segment they're looking in, and also a group of experienced people who look at the deals that are coming through and they vet those deals. And when you become a part of that kind of sector, for example, me being in a buy angel sector, as a part of the angels, I not only from healthcare but also, for example, this the industry that we are discussing about, the food tech and the food industry. So this is something very interesting. I would probably want to invest in, but of course, if it comes to buy angels, I probably want to do that. But whereas if I have to do it individually and I have to vet it, then it is going to be a little bit of a challenge for me. So as being if you are an investor want to invest, I think joining these kind of platforms helps it. And in generally, if you ask me, apart from the specific industry, even in health tech or life sciences, there is a lot of momentum that is happening right now. And this, I think, is the right time if some investors are looking to invest in this sector. Though I talked about the challenges that this sector has, but at the same time, I think this is a once in a time opportunity for investing, especially because there are a lot of things going for this sector. For example, the government has initiated a lot of initiatives to promote life sciences and biotech sectors. They have grants like BARAC grant, which is again a partner for BioAngels, which look at very good startups to invest in. And also there are a lot of incubation centers which are focused in this sector. So and also there are institutions which are encouraging young entrepreneurs to work out whatever their research is and to see if they can do a startup by themselves. And especially I come from Hyderabad, where we have a lot of pharma and life sciences startups coming in. I see there is a lot of enthusiasm and a lot of deliverables that are there from startups as such, and also post-COVID, there is an increase in investment. So there is also less brain drain that is happening now, and we are able to retain talent in India itself. So the biggest challenge before was that they didn't have the capital to see that they go from that idea or the initial innovation stage to actually implement it. So that gap is being filled with all this other like government incubation centers, institutes, and focused investment for partners like, for example, BioAngels. These are all coming together to invest in these startups. I'm sure that there will be unicorns coming out of this this sector pretty soon, and I'm very bullish in this sector.
Yeah, thank you. Thank you so much for sharing that with us. I think definitely agreed with the point of, especially in the early stage when startups are there, it's not easy to go up to VCs. It's not, you don't always have a business strategic plan in place. So you need a lot of support in terms of grants, research grants, doing the R&D, especially in life sciences where there is so much R&D to do in the initial part before you can even have an MVP in place. So just with keeping that in mind, I think, Shreya, just to move to you, in terms of, you've seen that there's been, I think there was a recent report around this from India Impact Investment Council, where they talked about how 2022 witnessed a healthy flow of investment in impact sectors like climate, agri-tech, health tech, but there was a decline in the total investment amount by around, I think, $1 billion US dollars. So in contrast to 2021, there were even fewer big ticket transactions. And I think we all know that this is, due to the challenging market conditions. A lot of things have changed in the last year with the war, with a lot of not just in India, but globally, the ecosystem, the funding in ecosystem has really tightened up. So considering these market challenges, how do you think, what kind of strategies can investors use to get back to maybe backing the right or funding the right solutions? And is there something about the Indian market which we can leverage at this point to kind of get out of that global slump, I would say?
See, there's no secret sauce to this, right? And this is not the first time that this cycle is happening. There have been multiple cycles. In fact, my managing partner has been through multiple cycles for us to remain, I would say, grounded and not go haywire. So for us, I think it's a great, or rather how we are thinking about it at the firm is that it's a great time for a purge, right? Or for a cleansing to happen, which means that good models, good business models that are focused on long-term problems will anyway get funded, right? And so it's actually a good time to be able to find those. The second is that I also feel that if you're looking at it from an investment perspective, of course, like when you're doing an investment, you also have to be very particular about the price that you're paying, because of course that's also one of the most important factors. And so in a way, you are not FOMO driven at this point, right? You are essentially pricing an asset rightly rather than paying for it just by FOMO, by the virtue of FOMO. And so I feel like it's actually a good time. At least we believe so at Aureolis. So yeah, that's that.
Yeah, no, definitely. Mirik, Jinesh, Dr. Tulla, anyone has any responses or anything to add to that?
No, I'll just say maybe that open cycles will come and go, but the only one thing that we need to take care is the climate challenge is this couple of decades, right? So we have to just ensure that we cannot be looking at, okay, cycles happened in the 1980s, that's different. But cycles happening now, we just need to double down on some of the bets. So I think there has to be some element of even at a down cycle or risk-taking ability should not go away, because once you start hitting the tipping points, then cycles don't matter at the end of the day. So I think that's just context from that perspective, that although there may be financial cycles, the sort of global cycle or the climate cycle is a very different one, and we just need to ensure that whenever they are not in sync, we try to push hard in that way. So that's just my perspective.
I'll add a tiny bit if we have a quick
Yes,
2 seconds.
please go ahead.
Yeah, agree with the assessments, the cycles and the urgency of the oil protein, and I mean, of course, the climate tech problem overall, just in general. I think, and like any other industry, what's kind of happened when I put on an all protein lens, an all material lens for a quick second here again, in terms of the investment slowdown or the funding winter and all of that stuff that we sort of talk about. There have definitely been huge corrections in valuations, and certainly growth stage capital is harder to access at the moment. The macroeconomic factors are affecting everyone in one way or another. At the same time, because of situations like these and the global macroeconomic situation being a bit harsh, people are looking to alternative categories of investments. And hence, while people are saying, hey, Beyond Meat stock is not exactly where it was supposed to be, or there are certain corrections happening in the domain. I think no domain is free from these corrections and valuations at the moment. And all protein to me, almost in the last about decade or so, kind of became that initial gold rush kind of a piece, if I may. I don't know if it's the most appropriate thing to say, where lots of folks jumped in to start companies in this space. And again, kudos to that, helping push the ecosystem overall. But at the same time, there was always going to be correction at some point where not a lot of companies are going to be viable. Not a lot of companies are building the right solutions with a moat, and not just building a product, but building a business, building the right team, and thinking about building something, the longevity, not something short term, because all protein is all over the news suddenly, right? And we are seeing a lot of that correction happening. It's sad to see that happen, and this is happening across geographies. But the India growth story kind of just remained, and it kind of shines outside of all of that, where India's economy is expected to be a growth story for the next 20, 30 years. So that bodes well for us overall, and continue to see a lot of good interest from traditional investors that would normally not look towards, say, all protein or biotech or climate tech overall, now starting to take interest in this space. And this may not be like, 75% of their allocation of all investments that this entity makes, be it a family office, be it a VC, be it an angel investment platform, any of these, right? But they're starting to take bets, and large VC houses in India are starting to approach all protein companies to talk about potential investments in this space. They've been sitting on the fence for a while, but it's changing a lot. Just in the last 4 or 5 years that I've seen it on the ground here in India, massive changes. So I don't think it's any indication or any reason to slow down. If anything, it's only an indication for entrepreneurs that if you're building something good, if you are clear about your business, about your moat, about all the key entities to building a successful company in general, then you're in good hands overall. And if you're paying attention to the global markets, not just thinking about India isolated, I think that's where they can really sort of win and weather this so-called funding window.
Yeah, I think definitely most of the things you've already mentioned. Thank you so much for commenting on that. And I think I completely agree with the fact that we talk about these things as being traction, but again, it's not a very simple journey. It's not just simply about making smaller changes, but there are so many players involved that there are multiple interests that we need to take into account. But at the same time, we don't really hold back in terms of is the technology, they're asking the right questions of whether the technology is going in the right direction, if the right people are involved. And looking at right now, our panel, I feel like the right people are involved. At least we have headway there. So thank you so much for coming in. I mean, we're already at time. I would have loved to ask a billion more questions to you all today, but sadly that won't be able to be possible. But thank you so much for taking out the time. If there are any ending remarks, anything that anyone would like to add, I would love to hear that. And then for all of our attendees, we'll be moving into the networking session. So Nicole, could you drop the link again in the chat box? And then we would do that. But any ending remarks before we move into the networking session?
Just a quick thank you to everybody and to you, poorvashak, for having us today.
Thank you, Jinesh.
Yeah, I think thanks. I think that's the ending remark.
Thank you. Yeah.
Thank you. Thank you, Poorvashak.
No
Thank
problem.
you.
All right. Thank you so much.
Everyone.
Bye-bye.